So in November, the Swix index was down about 1.6%. The all share index down about 1%. So not a great performance, but that's on the back of a number of months of kind of 3 to 4% ups. So the down not significant. We're still up in the region of 20% for the year. So it's been a great year. And I guess inevitable to have a bit of a leveling off. So there's no doubt that the South African market looks pretty expensive. One would have felt the same way a year ago. And I think there are two key fundamentals to look at. One is the currency. About 70% of the shares or the earnings on our market are influenced by the currency. In other words, if the rand weakens against the dollar, the value of that goes up. So if nothing else happens on the market and the rand weakens by 10% next year, the market will give you 7 to 8%. There are, and one has to stratify the market a little. You've got local industrial shares where the foreigners haven't really piled in, where there's still some good value buys at 10 to 12 P multiples. The bigger caps where the foreigners have bought in and pushed prices look pretty expensive. But I think our market is an accumulation of some quite unique stories which are put together. So we don't like to look at the market as a whole. We look at shares bottom up. And we still think we can put together a portfolio that's got pretty good prospects for 2014. I was asked for 2 stock picks. I'm going to give you 3. Number 1 is the December holidays. It's always a buy and we look forward to it. From a share perspective, I think the first one is Naspers. It's run hell of a hard and quite a few skeptics around, but it's a business that we've always backed. And just some simple maths. Its stake in the Chinese business Tencent and the Russian internet business Mail.ru are worth the current share price. So at the current share price, you're getting the entire DSTV Africa business for free. And you're also getting all of their other e-commerce businesses. And that's a part of Naspers that's unappreciated. There's businesses that dominate the internet in about 40 other countries where they're incurring big losses because they're still expanding the business. But that could well be worth another 200 to 300 Rand a share. So you could formulate an argument where the share is worth 1,500 and it's trading at around 970. The next stock pick is Sepaku. It's a cement business, 3.5 billion Rand of capex, and they turn the switch on in January and start competing with the likes of PPC, Lafarge, and Afrisam. When that business is running at reasonable capacity, we think it'll make around 1.50 Rand a share. At a conservative 10p multiple, that's 15 Rand a share. It's currently trading at 6.60 Rand. Very difficult to know when they'll get to the right sales level to make those kind of numbers. But at some stage in the next 2 to 4 years, I think there's 15 Rand a share in prospect. So put it away. Next year might be bumpy because it's a big plant getting switched on. Can have some big issues. But they'll get it right. There's good management, good shareholders. And at some stage in the next 2 to 4 years, there's 15 Rand written all over it.